my God, did you just see that? Lehman just went down.
I know. We are screwed. We are totally freaking screwed.
Just go for it. Ryan, you're on in 5, 4, 3, 2.
American investment bank Lehman Brothers has filed for bankruptcy.
You know there's trouble when employees one by one trickle out with their belongings.
The most high-profile casualty of the credit crunch.
I work on the trading floor. It's like a massive earthquake.
Barclays here in London was looking very seriously at whether it could buy Lehman's and whether it could raise the funding to get Lehman's. In the end, they pulled away. The banks are down 15, 20, 25%. And that is a big part of the European industry.
Okay, so let's take a look at how the hell this all started. So back in the 80s and 90s, technological advances in the financial industry and large-scale deregulation led to the birth of the securitization banking sector. Securitization, for those you don't know, is the process of turning an asset into security. When it came to the housing market, it meant taking mortgages issued by banks and converting these mortgages into securities that can be sold to investors. Unlike the old lender-borrower model, which ensured lenders' care in assessing the credit risk and credit history, this new model essentially rid the banks against losses by offloading the loans. The bankers were bundling these loans into CDOs and selling them on to investment banks. If the banks were selling these loans on within weeks of signing, do you really think they care how creditworthy the applicants were? Because as soon as they were sold, poof, there goes the risk of losses. To explain the process of a CDO, let's take 3 people, Tom, Dick, and Harriet. Tom is rich and wants a boat. Dick's a middleman and he wants a red sports car. And Harriet, well, she's poor as shit and wants a house. And before I forget to mention, Harriet is currently unemployed and has a total debt of $44,000, and there's not a hope in hell she's paying back a $4 million mortgage. But really, do the banks care? Absolutely not. Signature after signature, it's a payday for the bankers, but not quite yet. Listen up, because this is where it gets a little hard to follow. For the purpose of this exercise, I will be the investment banker. The banker takes the shitty CDO and sells it onto the investment bank for a profit.
And then what I do is I sell it on to the investor.
All payments now grow directly to the investor. Am I confused? Let's take it back a second. Let's rewind. Okay, Mr. Banker, he's created a CDO. He sold it to the investment bank, who then paid for a AAA rating from the rating agency. The investment bank then sells the CDO onto the investor. Now when Tom, Dick, and Harriet, when they go to pay their installments each month, well, they're actually paying an investor who hadn't the faintest idea of how big a pile of shit he was standing on. The availability of cheap credit created by the CDOs, well, it spurred a boom in the property development, with over 93,000 houses being built at the height. It seemed like every second person was being employed by construction, with employment in the industry shooting up at 12.6%. Of course, there was also the hoorah about the subprime mortgage market, which providing housing finance to the likes of the Harrys of the world who are surviving on a box of Honey Nut Cheerios a day. Okay, ladies and gentlemen, don't just leave us yet. Is everything making sense? Is it all coming together? Right? No? Good, because we're not finished yet. This is stage 2, the credit default swap. And I know what you're thinking, what the hell is a credit default swap? Well, let me tell you. A number of wise guy speculators saw the fragile framework of the housing market like a house of cards ready to cave in. So what did these guys do? Did they tell the authorities like responsible citizens? No, they bought themselves credit default swaps. Now, a credit default swap basically works like an insurance policy. And what were the policies insuring against? Loans going bad. And with the Harriets of the world getting housing finance quicker than they could say social welfare, well, it wasn't that unlikely that these loans would go bad. The credit default swaps worked the same way as a normal insurance policy. Investors paid hefty quarterly premiums on these loans, and if they went bad, they get a payout. Was it that straightforward? No. Unlike normal insurance where you can only insure something you own, credit default swaps enabled anyone to buy insurance on any loans going bad. You still confused? Alright, let's take a shiny new car. You insure that car for, I don't know, let's say $15,000. You tell your friends to insure it. You tell your friends to insure it. You tell your friends' fucking mother-in-law's dog to insure it. The policies on that car grow and grow until there's $1 million worth of policies on the damn thing. You put some snotty, fat, spoiled 16-year-old behind the wheel who has no clue how to drive, and you think it's that unlikely that the car's gonna crash? Same way if you're a Harriet, you think it's unlikely that you'll default on your mortgage. And when the car crashes and the mortgage defaults, when it all goes pear-shaped, what happens? The insurance companies have to pay out top dollar. And you guessed it, the CDS owners, well, they get rich. Really fucking rich. Okay, I'm gonna do this with my eyes closed, because if I stand up, I can't stand up, okay? When the insurance companies were selling all these credit default swaps, they weren't putting any money aside in case they had to pay out, so when the housing market imploded, they couldn't afford to pay out all the CDS owners. So in comes the government bailout, and how can a budget-strapped government afford this? They might cut spending and tax their people, but suddenly everyone's a little strapped for cash. Everyone but the CDOs. What happened to these guys? Well, investors eventually realized that they were rubbish and they stopped buying them, and the likes of the Lehman Brothers, well, they now had a ton of CDOs that they couldn't shift, and, well, you guessed it, kaboosh. They went bankrupt, and that's it. Well, actually, give me a second.
So that's the story. How the economy went from that to that. Now, it may not be Margaret fucking Rabbit, but I'm the best you're gonna fucking get.
What? What?